The great state of Colorado taxed those with $60,000 of income. That's what we're going to talk about here today at the Heritage Wealth Planning YouTube channel. The tax burden you have in Colorado when you earn $60,000 in retirement. So if you like what you see here, as always, subscribe down below, and then don't forget to hit the bell to be notified for future content. So let's dive right into this, my friends. So as we do, we start at my website, heritagewealthplanning.com. We go over to the tax tools area and you'll see interactive tax tools. So tax tools, a little drop down, interactive tax tools, and click that puppy, and that'll take you to the federal interactive tax tool program that I use from the Tax Foundation that has given me the right to put that on my website, which is wonderful. Highly suggest you mess around with this because lots of great info in there. What is that right there? I know it's a Twitter, Facebook, LinkedIn. I don't know what that one is though. It looks like an email. Okay. Interesting. Anyway, so then we want to scroll down to the smart asset state tax tools area. And we're going to look at Colorado, which is in the light blue area. And so it's moderately tax friendly. And let's click that sucker on and see why we have moderately tax friendly in the great state of Colorado. So what we do here is we start with $20,000 of Social Security income, $40,000 of IRA distributions. We're 66 years old to make sure we take advantage of the $13,300 in standard deductions that we have because of the Tax Cut and Jobs Act of 2017. And we're married filing jointly. And what we see is we have $556 in Colorado taxes to go along with our $2,871 in federal taxes. So our total tax burden is $3,427. $3,427 when you have this kind of structure, 40,000 IRA, 20,000 Social Security. All right. Now let's see here. Let's see Colorado. What's their tax rates? Let's see. And Colorado tax rates are, I think we got to go up just a tad. Where was this? Above this, if I'm not mistaken. Colorado tax rates. Tax rates, what we're looking for. And I seem to be ahead of myself here. Colorado tax rate. There we go. Well, I guess it doesn't tell us, huh? I know it does someplace. Colorado tax rates. Maybe didn't go down far enough, maybe. Okay. Keep on going down and see. That's tax friendly. All right, here we go. No, I don't want that yet. Oh, maybe they don't. Okay. So that's weird. They usually have a table for tax rates for each state, but I don't see that here, and I don't know why that is. Weird. All right. So anyway, either way, we have you can see 556 in Colorado, 2871 in the feds. Now let's flip these around and say we got 40,000 Social Security and 20,000 IRA distributions. Everything else is the same. And now we have 556 at Colorado and nothing to the feds. Isn't that interesting? So Colorado looks like they have a flat. Why do they got the Colorado tax rates here? This is weird. Normally they do, and I'm not seeing it. That's so Colorado has a flat tax, I guess. Yeah, I don't know. Yeah, I don't know. So I don't see where the tax brackets are here, and I don't think they have a flat tax. But either way, $556, regardless of from where your Social Security comes from, your income comes from. I'm just curious if we just did no IRA distributions, with Colorado still taxes? I bet not. Yeah, so Colorado does not tax Social Security, but they do tax that $20,000 of income. So let's go into why the difference between the two. Now, here won't be applicable to Colorado, but even if it were, Colorado is minimal compared to the Fed tax that you have to pay, because the feds can be $0 or $2,871. So remember, we're always trying to figure out what our provisional income is. Okay, so in this case, you take half of your Social Security plus your other income, that equals your provisional income. All right, so half your Social Security is $20,000 plus all your other income is $20,000. Let me make myself bigger again for you to easier see it. And so we take half Social Security, all of our other income, and so our provisional income in this case is $40,000. All right, so we take what is provisional trying to accomplish? Provisional income is trying to see how much of your Social Security benefit will be subject to taxation. So we have a $40,000 provisional income. The first $32,000 is not subject at all to tax, none. The next 32 to 44,000, 50% of whatever is in that bracket there is subject to taxation. So 50%, in this case, 40,000 on provisional income. The first 32 is tax-free. The next, in this case, $6,000 is subject to taxation, but we times that $6,000 because 40,000 minus, or 4,000, I should say, minus 32,000 equals $8,000, which means $4,000 is taxable as income. So $4,000 of our Social Security benefit will be subject to income tax. All right, so again, provisional income is $40,000. How do we get that? We took half of our Social Security benefit plus all of our other income. We take this 0 to 32K. How much falls into that? Well, in this case, 32,000 of that 40 falls into that, which means nothing is subject to tax. The remainder in this case is 40,000 minus 32,000, which gives us $8,000. We times that by 50%, which means $4,000 of our provisional of our Social Security is subject to taxation. Now what we do is we take our $4,000 Social Security plus our $20,000 IRA distributions, and that gives us adjusted gross income of $24,000. So our Social Security amount, $4,000 plus our IRA is $20,000. Do we equal those two up? That's $24,000 is our AGI. Should have written that there. AGI, adjusted gross income. But remember, as I say all the time on this channel, it doesn't matter what your AGI matters. It matters what your taxable income is. So in this case, our taxable income, because we have to take away our standard deductions, which means our standard deductions are $26,600, which means we have a negative $2,600 of taxable income. We have no taxable income, my friends, because our adjusted gross income is $24,000. Our standard deduction is $26,600, thus no taxable income. In fact, we have a negative taxable income. So what I was highly suggest you do is start moving money from your traditional IRA or 401k or TSP or 403b to a Roth to take advantage of the fact that you have no taxable income whatsoever. Now, how much you should do, I'll leave that to you. But man, if I got zero to limited taxable income, man, I'm starting to move big time Roth conversions. Absolutely take advantage of it now. Because as you go through higher and higher and higher with RMDs, required minimum distributions, the taxes start getting bigger and bigger and bigger. So take advantage of it now for sure. All right. So let's look at what some of the cheaper places in Colorado are to live, because Smart Money does a wonderful tool here where they show us some of the cheaper parts of this great state of Colorado. And it's number 3 is probably where I'd want to be, up to the north part of it, where you see those buffalo or bison. Man, I'll never forget going through Fort Collins up to Cheyenne. And look, we went to the Great American Beer Festival when I used to work at a bar. We did brew pubs back in Arlington, Virginia. So every year they sent us, man, I think we paid for it, but it was awesome. I loved it. And of course, that's probably one of the reasons why I don't drink anymore, because I drank so much. But anyway, we go, and I remember renting a car and going up to Fort Collins and then through Cheyenne and just looking over and seeing these bison on the side. It was just awesome. It was spectacular. It was one of the happiest moments of my life. I said, man, there are bison out there. Don't forget, I'm from Maine. You don't see bison in Maine. I imagine that'd be the same way as someone from Colorado seeing the ocean for the first time. All right, so now in the Redlands, wherever that is in Colorado, in this scenario, we have $50,000 of income. Whoa, something just happened. Tesla, national weather emergency. That scared the heck out of me. All right, so anyway, you got $50,000 of income. 15,000 from Social Security, 10,000 from private pension, 15,000 from retirement savings, and 10,000 in wages. This is different from what I was just sharing with you, $60,000 of total income. This is a different scenario, just using what smartasset.com is telling us. And they live in Redlands, Colorado. In this case, they pay $6,300 in total taxes. A lot of that's because they have those wages. They pay not much in property tax, 0.49, not much in sales tax, and not that much in fuel tax. So the retirement tax friendliness in Redlands, Colorado is a nice 60.21. I'll take that. Not too shabby. Go down here to, I've never heard of Canyon City. I have heard of Canyon City. That's in the south, right? Yeah. Oh, yeah. Canyon City. Remember driving through there. my wife was pregs with our first, and we're driving through Canyon City. I just remember seeing this huge mountain. I felt like I was in Ireland. It was awesome. Green, this huge mountain is green. Oh man, beautiful. Anyway, Canyon City is, look at that, 60 as retirement tax friendliness index, which is pretty good. Alaska is the highest, by the way. So just FYI, Alaska is like 99.8009, whatever. And so how they calculate, I mean, look at here though, we already talked about you're not going to pay much in income tax if you do right by planning for Social Security. You can also reduce your property taxes pretty thoroughly, because this, what they do is they take the median property tax in each town throughout the state, and they divide that by the median home value, and they say the median property tax is 0.54, which is pretty doggone cheap, my friends. Pretty doggone cheap. They look at sales tax, and they have this calculation for sales tax, and they look at fuel tax and whatnot. But, I mean, that's pretty doggone cheap, man, because if you have no taxes other than $500 in Colorado, 0.49 property tax, a little bit, I mean, you're paying, that's $1,000 in property or income tax and sales tax total for the year. And let's say you have a $250,000 home. And this, I would imagine this would include any exemption, because they're looking at the actual property tax paid, dividing by the actual home value. So I'm including if there's any homestead exemption that's already in there. You're paying, you're paying $250,000 times 0.49%. You're paying $1,200 in property tax, another $1,000 in fuel, income, and sales tax. You know, that's $2,200 in taxes on 60,000 income. Man, I'll take that. So good job, Colorado. I don't know any of these other places, but let you figure those out yourself if you're moving to Colorado. Cimarron Hills sounds nice. Where's that? Oh, way out here. Okay. Again, don't know anything about it. So I hope this helps, my friends. If you like what you see here, as always, subscribe down below. Don't forget to comment. Comments are always welcome. Comments and thumbs up help me a lot. And you can find all this stuff at heritagewealthplanning.com and just the tax tools, the interactive tax page. And we'll see you next time. Thanks now.